Let me see. Hold on one second.
Yeah, just hit the slideshow, that's all. You were there. There we go. All right, we all set?
I think so.
I think so too. Well, welcome everybody. Don't see anybody, so I don't know how many people are there, who's there, etc. A little bit different doing a Zoom for a meeting this large, but we're all used to Zooms, and hopefully as we go along this, it works out okay for everybody. Beth and I talked about as we go through the presentation, if you had any questions, you put it in the chat room, etc. It may make sense to answer those questions as we move forward, and Beth will interrupt me, and we'll go from there. So what is an audit checklist? For most of you, you probably think it's a pain in the neck and rightfully slow, but it's an important tool from an audit standpoint. And first, as you have to understand, why do auditors use checklists? All right. But before we get into it, and as I go through the presentation, hopefully it comes a little bit clearer as we go through. I think it's important to understand what an auditor's role is. My kids still have no idea what I do. All right. And they're anywhere from 22 to 30 years old. And they know I audit stuff, but they still have no idea. So not everybody knows exactly what we do. Basically, the fundamental thing that we're hired for is to issue an opinion on whether your financial statements are free from material misstatement or whether through fraud or error. And that gives the public, people that buy your bonds, the citizens, the stakeholders, etc., confidence in that you're in effect safeguarding their money and spending it in accordance with where the budget was voted in your particular community, and we give them that confidence. One of the things we don't do, the audit opinion, the clean opinion that you want to have is not an indication on whether or not we agree with how you spend your money. So in effect, how you allocate, how much you spend on school, how much you spend on public safety, whether you build a new school, etc. That has nothing to do with the audit. The audit is just making sure that your systems of internal controls, your policies, your procedures, everything that you have in place and how you manage your financials. Yeah, Beth, I'll say next slide when I want to move. That's okay. And so what we do is we need to understand your critical financial operations, the internal controls, your policies and procedures. There's a variety of ways to do this, but what we've found over time is that the use of checklists are a key tool in gaining and understanding your operations, the internal controls and policies, procedures, etc. We cannot audit unless we understand you. You know, it's like, what do you do? What type of enterprise funds do you have? What type of revolving funds do you have? What type of single audits are there? So unless we understand what you do, there's no way we can conduct an efficient and a comprehensive audit. And that's our main goal as we go through this. One of the other things that is kind of new in the last 5 or 6 years, we've always assessed risk, but governmental and auditing standards have switched everything to a risk assessment audit. And so we need to assess risk. Different transactions, different balances, different accounts have different levels of risk associated with them. And we need to understand that. If we don't understand that, there's no way we can associate a risk element to that particular transaction cycle or specific balance. Next slide, please. Okay. One of the most important things an auditor has to maintain is we have to remain independent. That means that we can't audit our own work. We can help you change your system of internal controls to strengthen your internal controls, to make suggestions, etc., but we can't do your work. You can bring in another audit firm or a consulting firm to help you out on that fact, but we must remain independent. And one of the important parts of that is that at the end of the day, when we give you a what's called a letter of representation from you, or even any engagement letter, it stakes out and says, these are your financial statements. These are not our financial statements. We help you compile them, but everything in them are yours. You have to have a system of internal controls over financial reporting sufficient to create those financial statements yourself, agree with what's in there, understand all the adjustments, etc., and take, in effect, control of those at the end. One of the other things that we have to do is, especially now with the Single Audit Act, and you think about the ARPA and the CARES funds, everybody's got that. A lot of communities out there are now going to have to do a single audit that never had done one in the past because of the ARPA and the CARES funds, depending on how much you're spending in the next year or two. But one of the things that we have to do is we have to comply with governmental and general auditing standards. And that's required that we document all procedures that support our conclusions with audit evidence. What that means, one of the things, easy way to put it, and is that if we don't write it down in our audit work papers, if we don't have supporting evidence, it can't just be in my brain. The AICPA and the government basically have said, the Office of Management and Budget said, you didn't do it. So unless you write it down, unless you have documentation of all parts of your audit, it didn't happen, okay? This evidence is important, and it's used to support our independent auditor's opinion. Next slide, please. All right. Here's one of the things that might make you feel good. If we don't comply with auditing standards, the results would be a substandard audit. All right. Believe it or not, and some of you may know it or may not, that all auditing firms that conduct audits or attestation engagements are required to go through a peer review every 3 years. That's where we go out and hire another audit firm who's completely independent from us, that do peer reviews as like we do governmental accounting, and they audit us. They audit our audits, all right? And so it's a good thing for the profession to make sure that everybody is living up to the standards. And as I said before, this gets into the documentation that's important. The reason we're required to get checklists from you is it can support the evidence. In the same manner that we give you checklists, the peer review firm makes us fill out more checklists than you, okay? And so they have documentation to support our audit practice and whether they give us a clean opinion or not. And so we need, just like they need to understand us. And the checklist includes all kinds of things of how we manage our practice, tone at the top, not only how we conduct our audits, but also whether or not there's a sense of integrity within the firm, that people are going to do the right thing. The tone at the top, that's important as you go through, and whether or not we've corrected any findings from the previous time we had the peer review. They take a look at that, same way we look at your particular operations. If we fail, there are significant ramifications. Okay, next slide, please. Okay. And what those ramifications are, these are just a couple of them, but if there's an undetected error in the financial statements, we could be exposed to financial risk if we don't comply with auditing standards. We don't want to get sued, okay? And we don't want to lose a suit. So we have to make sure our work papers are in compliance with those governmental and general auditing standards. And things still can happen, but it would minimize the risk as you go through. There's been several firms, some in Massachusetts and throughout the nation, that especially in the government arena, if we fail the peer review, they have to almost abandon their the governmental practice because of the strict adherence to governmental auditing standards by Office of Management Budget. So we have to make sure that our audits compliance with all those particular standards. And so if we fail this, the firm's reputation will take a significant hit, and that could lead to collapse. I don't know if all of you are old enough to remember 2002 with the Enron audit with Arthur Anderson, huge firm, national firm, a big five firm. They went out of business because not of a peer review, but a substandard audit, shredding documents and all other things. So if a firm as large as Arthur Anderson can go out of business due to some bad auditing, and in effect with the thousands and thousands of clients, so can a firm like Powers and Sullivan and everybody else that does this. And I know this may sound repetitive, but I'm trying to explain the reason why we use checklists. We didn't have to really in the old days. We'd have a conversation with the client. We'd go through, we'd write a memo, and that would be sufficient in the old days. There wasn't that big risk assessment as we went through. There wasn't the need to document everything that we need to do during the planning phases. But we do that now because, like most industries, everything's changing, okay? But one of the other reasons too that checklists may or may not be more prevalent is that sometimes we do it in person and we fill out the checklist as we're talking to, say, the treasurer. But things may change with the pandemic and everything else. How many things are we doing remote, as in today? And it may be that we'd have to send you the checklist, you fill it out yourself, you send it back to us. We would then review it and then have a discussion on it just because of social distancing and everybody's operations and how they're going to safeguard their employees and how I'm going to safeguard my employees. So these things are not going away, and they may get even bigger as time goes on because of the advances in the auditing techniques and what we do. Next slide, please. So part of our other role is to evaluate your current operations systems, identify deficiencies in controls and procedures, report to management the significance of the deficiency and the appropriate level of risk. So this is what we do to, in effect, when we're understanding you, when we're getting the checklist in during that initial phase, is that these are some important things that management may need. As we're going and evaluating risk, we've got to take a look and see whether your current operations and systems are operating as intended. It will identify, and the checklist will identify a lot of times, the deficiencies, internal controls and procedures. We would design our tests to test those particular deficiencies. And the other thing that nobody likes is when we do our management letter and report to the select board or the finance director or the mayor or whatever, the deficiency in internal controls and what risk level is that at. It's either a material weakness, a significant deficiency, or another matter. If you get other matters are things for efficiency standpoint, but if you have a significant deficiency or material weakness, it's something that is critical to change in the next year as you move on. But even more important, as an auditor, depending on, and everybody does it a little bit different, but most of the firms that are out there, the recommendations they make, they're really on your side. I know we're auditors, etc., but we want to help you, if possible, make your financial operation, the controls, your policies and procedures a little bit better as we go through. And if we can help you improve on that, it actually makes our audit easier. And so, we're back a few. Another one. Yeah, one more. Okay. So So as we go through it and using those checklists, et cetera, it helps us evaluate the appropriate level of risk, make practical recommendations to help you. Because we see so many other clients and so many other governments, we can tell you things that other places are doing that they love the change, and it could make your life easier as we go through this. But like I said earlier, we cannot do any of this unless we understand you. And this helps. And this is what we do as an independent auditor. If you could flip to the next one, please. Okay, the audit process, okay. Audits are conducted in phases, each one building on the previous phase. There's a planning process. This is phase one. And, you know, most times, depending on the size of your audit firm comes in the spring, does some work, leaves, and come back in the fall or the winter to finish up as you go through. There are things that happen at your office, and there's things that happen back at our offices. One of the most important things is planning. This is one of those things in auditing standards that need to really be documented. How you plan the audit, how you understand the client, how you prove you understand the client, and then based on that understanding, we will go through and design our audit programs each year based on our understanding and the risks associated with all of those transaction cycles, okay? This is when the first series of checklists are used. And so this is the preliminary phase. This is when we go through. We're not looking for everything at this point in time, but we're also gaining that understanding as we go through of everything that you do in relation to your key financial processes. Now, realistically, for a government, it's the accountant auditor's office, it's the treasurer collector's piece, and the schools that are your key financial offices as you go through. School a lot of times because of the single audit, but the treasury, collecting, and accountants are the three key areas that we really evaluate risk as being high and what's being done in there. Your auditors will not, unless you ask them to do that, normally go out to the Council on Aging and ask them, okay, let me go through all your revenues that came in. You know, they got $80,000 in for the year. From an audit standpoint, you know, you're a $100 million operation. We don't care about the $80,000. Okay, so we're not, with the risk of that for a financial statement, this statement, whether through error or fraud, is low. We will go out and look at that if you request that we do a site visit for that. But realistically, we're not sending out checklists to them. We only send out checklists to them if you request that we do an internal control review of a specific department or process that is not a key element as you go through. All right. And the easiest way this is accomplished by an auditing firm is if you had a policies and procedures manual, flow charts, everything else, where all of these things are described. But most clients don't have that. They have some have it, some don't, some, you know, we haven't found a really comprehensive one. Yes, it's not required right now by the government or the DOR, et cetera. People know what they do it all the time, and trying to find the time to design a policies and procedures manual is somewhat difficult. If you do have one, we will ask for it. Most times it will cut down on the need for a lot of the checklist, but if you don't have one, we have to go through and start gaining that understanding. Next slide, please, Beth. All right. So if you don't have a detailed policies and procedures manual, then we need to gain that understanding through conversations and checklists. So normally up front, we do some planning as you go through. We'll have a general conversation, usually with the treasurer, collector, finance director, accountant, just to get a general sense of what happens as we go through. Has there any changes this year as we go through this? And then we would pass out these checklists, and they're designed to, like I said earlier, identify strengths and weaknesses in controls, identify segregation duties issues, identify risk, document processes. Now, the first year as we go through this, the phase 1 checklist, they're completed from scratch the first year. So if you use Munis, for example, and you have a system in place, and we documented that from the previous year through the use of checklists and conversations and testing, etc. We would probably not be sending out those checklists again. It'll be more of a conversation with the IT, with the treasurer, with the collector, with the accountant and finance director, school business manager, to find out if any major changes occurred in your system. We're not asking right then for documenting the systems about your staff, whether it's important to know if it's a staff member change, but we're looking with those checklists, and you don't have to fill them out in totality. We do and have those checklists in our audit work papers. And so for the first year, we have to go through that same lengthy piece to discuss. And in our work papers, using those checklists and going through that, we will, the second year, update everything. And it may be just be on conversations as part of what we do inside of the phase 1 planning. We have to go through, if the answers are the same, the software actually that we use makes it easy for us to say, all right, no changes this year, or if there are changes, to update that. But that's, again, documenting for what we need, the peer review, to make sure that we do a compliant audit, something that has to happen every year. One of the things that people get confused on is, at this point in time, the focus of what we're talking about is not on the capabilities of the staff, but how the duties and responsibilities are assigned. And that's part of that. Could you go back, please, Beth? Okay. It's not on the capabilities of staff, but how the duties and responsibilities are assigned. So if your system is in place, your system shouldn't be built on the strength of the staff. Your system of internal controls and safeguards should be built on a process that gets filled in by someone that you hire that has the capabilities to perform those functions as outlined. And if you had that policies and procedures manuals, you would have roles and responsibilities of those particular positions as you go through and take a look at that. Later on in our audit, we will evaluate the staff as part of it. We may not be telling you that, but we evaluate your capabilities as a treasurer or collector every time we go out to audit. In like everything, there are better treasurers, better collectors than others. Same thing, there's better auditors, there's better everything out there. But whether or not you're capable to do that, and whether or not you possess the knowledge to complete those duties and responsibilities, that's part of our risk evaluation a little bit later. But what we're looking at now in that first phase of the audit is, do you have a system that's functioning and designed to safeguard the assets of the entity? And these checklists will normally be distributed to the treasurer, the collector, accountant, finance director, assessor, school business manager, town administrator, if we need, depending on the role they play. Sometimes the town administrator at a place may be the purchasing director also, so they may have a role to play, and the IT director, and others, depending on community specifics. And what I mean by community specifics, not everybody has an electric light department. Not everybody has a water fund or a sewer fund or an enterprise fund. Everybody has a general fund if we're just looking at treasurers and collectors as we go through. But if you're doing another type of a municipality, a sewer district or a water district, etc., the checklist will be tailored to that particular environment and given that understanding as we went through, we would pass along those particular checklists. Next slide, Beth, please. Okay. Type of checklist used. Now, one of the things that happened is there are different software packages that we utilize at Powers and Sullivan to conduct our audits. And there's different companies that assist us in making that software work for us. And then we're supposed to take that general package and tailor it to each particular community. But different software packages for audits, there's several of them out there. Some audit firms may use a different one. We use a specific two that we use as part of it. So what I'm talking about may or may not be done by all the audit firms in the same manner. I'm kind of describing how we do it. But the end result is the same, is that everybody needs to do exactly what I've been talking about, and the use of checklists is important. I know some firms do a lot of checklists and send them out to the clients, and some do a little bit like us, send them out, but also conversationally, maybe fill them out as you go through. So the type of checklist that we use, and again, sometimes we might be filling out a checklist that we didn't send to you, but we're following that. We have the checklist ourselves and getting the direct answers from you. One of the things we have to evaluate as part of those checklists is the control environment. This is entity-wide as those charged with governments, management, employees. Do they demonstrate the commitment to ethical behavior, integrity, accurate accounting, reconciliations, etc.? So this gets a little bit into the staff and the evaluation of that. And it kind of comes into an internal risk assessment. How does management respond to manage risk? If you had the town administrator just completely blow off a material weakness that your auditor has at the end of the year, well, from the tone at the top, if you're sitting as a treasurer or a finance director or an accountant or in charge of receivables for public works or whatever, and that's the tone from the top or the select board or the mayor, that's going to filter on down. So the risk associated with an error occurring or fraud occurring to be higher because of that type of behavior. And we're actually judging you based on those checklists on those particular questions, based on your response to previous management letters, how seriously they take their job. And trust me, there are an incredible number of places that are completely different. You know, you can have a material weakness and it's not resolved. You know, as treasurers out there and collectors, a lot of times we'll go in and, you know, cash hasn't been reconciled all year. Well, that's horrible from an internal control standpoint. The risks are really high that, you know, you in performing your normal function would not be able to, you know, detect or correct a material or an error that occurred on a timely basis. That's a material weakness of internal controls. That's something that could change our audit opinion depending on how bad that is. We use these checklists, whether they're handed out to you or the audit firm is using it behind the scenes to make this particular assessment. You know, it would be easier when I'm doing this, because a lot of times seeing people's faces and the rest of it as we go through, and we could know, and everybody does know, that this does happen. And some of you are, you know, saying, yeah, that's my boss, or no, my boss wouldn't allow anything. I mean, we get, especially with treasurers, some of them not going to let, you know, 22 cents go as, you know, with the $100 million operation, and they're not balanced by 22 cents, and they're going to go find that. Same with some accountants, same with some collectors. We kind of love them up to a point. You know, if they're falling behind in everything else because they're chasing 22 cents, it doesn't make sense, but there's got to be that balance as you go through. And so those checklists help as we move forward as part of the audit. Next page, please. Okay, so we're still in the phase 1 planning. Okay, we haven't even got into auditing at this point in time. We're just still evaluating. And there's a lot of work that goes on from an audit standpoint behind the scenes. Things that you may not realize we do, but we have to do. And again, in order to have a comprehensive audit, these things are very important. And so one of the things that we do is take a look at the control activities of significant transaction classes. Okay, and so we give you a checklist on that, say for cash. Well, if we don't understand how you process disbursements, both vendor and payroll, how can we audit that? So that checklist would be designed to say, okay, where's the start of a vendor, purchase? Well, we'd have to know from what's that cycle, what happens when it goes through, and realistically, it starts at the department level as a purchase order, as you go through all this, and then all the way through to when the cash, you write the check, everything's approved, and you reconcile that bank account. So we need to know all of that because there's key controls as you go through. And like I said, if you had a policies and procedures manual that documented this, most of the checklist questions would be part of that. What we have to do is use that checklist and fill in and describe in our work papers the cash disbursement process from a vendor, putting in all the people that are associated with this process, and then determining whether or not there are holes in the system, duplication of effort, things that occur. So there's the balance as you go through. And so the checklist you see on cash disbursements will have a lot of questions just related to that, all the way through and including how it's recorded on the accounting ledgers and through to the reconciliation, outstanding checks, everything else. Same thing with the payroll piece. Cash receipts, so the cash receipts, how are the cash receipts taken in? Now, there's a variety of different ways that could occur. And one of the things, especially with cash receipts, what we may find that as we go through, we may initially give you the treasurer the checklist as you go through, but we may find that, oh, the cash receipts related to the schools are taken in over here, and because of the size of the schools and everything else, they actually with school lunch as you go through when, people paid for school lunch and cash, or the after school programs or the revolving funds, we may find out there's several $1 million worth of cash receipts not collected at the treasurer's window or through the collector. And so we would then, based on that knowledge, distribute an additional checklist out to those major places that are getting cash receipts in. What you may do as part of this is, as a treasurer and you're processing cash receipts, a lot of the things on that checklist will trigger you and say, you know what, I'm doing this at my window, so should the departments. And you may want to and request that we send those out to specific departments for each point of collection that can come back in, even though not material, to find out whether or not they're safeguarding the cash at night. I was doing an audit once and we were left in a side office in the treasurer's office at a client. This was 20-something years ago. And I got up, and on top of the file cabinet, I found 3,000 something in cash and probably another 8,000 in checks just sitting on top of a file cabinet. I don't know if they were testing the auditors to see whether or not we'd take it, but it was sitting right there and anybody could have taken that. You'd want to know that as you go through. And these type of checklists are used to find out whether or not your departments that are in effect collecting the cash for you as a treasurer are safeguarding it, so you know when it gets to you, all the receipts come in. Or the other piece, when you're processing cash receipts, how do you know everything they were collected made it to you? So it's really important in that. And if you really think back, and I would say pretty much every treasurer and collector out there knows that theft does happen, okay? I could tell you a lot of stories about all the fraud that we've found over the years as you go through, some of it minor, some of it major. And a lot of times it's preventable if you have the right systems in place. You'll also have checklists on investments. Now, investments, you usually don't get the cash itself, but we want to know how it's managed, and the checklist will be focusing on that. Next slide, please. All right. So other control activities for significant transaction classes: revenues, receivables, and receipts. Depending on how the collector, how much of the receivables are collected, sometimes everything goes to the collector's office. So we need to, and a lot of times the treasurer's office is different than the collector's. Some of it combined with one, in effect, finance director overseeing both. So different type of checklist on different places, but we'd have to document if the collector's receiving that and doing all the receivables, all the information that's required from both the treasurer's side and from the collector's side. And sometimes you have an electric department as an example. They take in a lot of receipts. Is that going through their treasury office, or is it their treasury collecting office, or is it going through the collector's office? So we'd have to give those particular checklists out and understand those systems if they're significant. Sales and service revenues and receivables for enterprise funds. They're different than taxes and motor vehicle, etc. There's a reading that goes on, say, for a water department that generates the bill based on usage, etc. There are specific checklists for those type of service and sales type receivables, because there's different controls that are needed to be put in place in order to safeguard how the revenue is collected and how it's billed. Other control that's significant: payroll and related liabilities. Do you do payroll internally? We'd have to understand that. Do you do it? Do you hire a vendor outside to do that? Payroll is one of the biggest expenses at a community, and so therefore we need to understand that particular operation. What's the software that's being used? How's it related? How are you paying your tax liabilities? All of those checklists are designed to give us an indication of how they occur, and who actually does and does the payroll, the timesheets from the department all the way through. Expenses and warrants payable. As we go through that, how do you pay a bill? How do you record that on the ledger? All that transaction doesn't go across one department. There's several departments. So actually finding out what everybody does, that checklist helps identify where the important pieces are. Sometimes they're centralized warrants payable type of things. Sometimes they're decentralized. Sometimes departments have access to, say, a munis general ledger that they're putting in their payables there. And sometimes, oh, you got something, Beth? Oh, no, I just saw you have your finger up, so I didn't. Capital assets and expenditures. That's an important, and the expenditures related to the capital assets. That's important from the standpoint of making sure that your financial statements are correct, because capital assets are accounted for differently. The expenditures usually go through a capital project funds, and so the expenses and the warrants payable and the revenues coming in for that particular project are pretty much the same for a special revenue fund for a capital project, but the difference is you have to convert those expenditures into actually capital assets for your entity-wide financial statements at the end of the year, the full accrual basis. So we need to know about that. The next slide, please. Okay, debt and debt service expenditures. That's a significant transaction class, and we have to make sure we understand who does what. How does that, how do we have to audit that as we go through? What I find is most treasurers have a really good handle on their debt service expenditures, and it's really not that difficult an audit area, but we still have to document how that occurs. Insurance and self-insurance. Simple insurance is simple insurance if you're just premium based on your health insurance. But I've seen in the last couple of years, a lot of places convert to a self-insurance with the savings that have gone along with that, especially with the pandemic, because we've seen in the pandemic side, especially in that first quarter, back in 2000. As we went through, we had a client that was on self-insurance, and that last quarter from April, May, and June of 2000, when the pandemic hit, they normally had a $3 million a month transfer over to the health insurance trust fund. And then from there, the actual expenses were came against that. What we found is that they normally spent $3,000 a month on that, about $36 million a year. But in that quarter, in the next couple of quarters, they only spent about $1.5 million because people weren't going to the doctors and the hospitals in the initial stages. So they made a lot of money in there. I wish they didn't. I wish it didn't happen. But understanding how that works, and especially for self-insurance, those checklists are important because different self-insurance programs work differently. So you just can't assume they all work the same way. General computer controls. This is probably one of the things that is the hottest topic out there from that. And I think all the treasurers are aware of all the different horror stories that they've seen with, especially with cybersecurity. We have to make sure you have your general computer controls, the software used, the safeguard, how often do you back up? That's where we'll be talking to IT if you had an IT department, going through and giving them a checklist on that. And what we've found is that most places have started to take this really seriously. And we've seen, in the last 5 years, a really robust change in security for cybersecurity. We've done the same thing for our audit software, and what we've done and how we protect about cybersecurity, all the dual controls. I can't log into anything unless I get something that comes on my phone and says, is this you doing this? And I have to hit yes. And so all those dual security pieces that are needed as part of this. Cybersecurity is one of the most important topics as you and areas of control. And we have specific general questions on cybersecurity that is extremely important as we evaluate what you do. So IT is very important in understanding that audit process. Next slide, please. Okay, mentioned this a little bit earlier. Some firms walk through the checklist in an interview, and others have you fill them out. Okay. Either way, they're needed. They're really needed in the audit process. We're still in planning. Again, we've said this a million times. These checklists gain an understanding of operation. Done in the first year and updated answer. The only time that you really have to go through the big checklist again is if you change your accounting software, you need to start all over again. We have one client going through that now, and for fiscal year 22. So we're doing this right now and getting the checklist out to them, but everything they did before is now different. So everything that we had and evaluated from a risk standpoint is gone, and we're focusing on as you move forward. So, so you don't have to do this every year, and that's a good thing. Now we've completed and documented your system, and then we move on from an audit standpoint to risk assessment. The next slide, please, Beth. Okay, this phase does not use checklists for the most part. Some firms may. This is performed by the audit team to assess the risk based on the study and evaluation of the internal controls performed in phase one. These checklists that we used in phase one, again, it plays a key role in documenting the audit work papers that the firm understands your operation will be in compliance with auditing standards. We do this, we use the checklist, and we do the risk assessment. What we're doing is we're figuring out the riskier areas as part of the process based on our understanding of your system. As we design, you can go to the next slide now, Beth, thank you. Based on the results of what we did, we figure out each year, what are we going to audit based on the risk assessment? And that could be anything from things that we've seen during that initial process where we used all those checklists to find out how you operated, what your system of internal controls. But how are we going to audit? The nature and extent of the auditing procedures in each significant audit class, transaction class. We may do and design things because of the significance and the dollar level of a particular transaction class. We could have just normal audit procedures, we have extended audit procedures, and we have limited audit procedures. So what we end up doing at a later time is based on that phase one, where we used all those checklists to gain an understanding of you, and then design our audit programs for phase two and into the next phase after that. I put in here in the middle, every municipality out there that we audit, we always identify cash and investments to be a high-risk class, which will result in extensive procedures and the use of checklists in the next phases. So treasury and collectors don't get away with that, because realistically at most governments, cash is the most important thing out there. If you control cash, if you reconcile cash, if you do that, well, we know that what came in and what went out was properly authorized. And realistically, the only thing that could be a problem is the geography of how you posted a transaction. Oh, I posted an expenditure as a police expenditure as opposed to a fire. I posted it as a school, etc., into a grant where it should have been general. So cash and investments are by far, and how you do it at the treasurer collectors, you know, how the collectors receive all of that major source of money when you get in, the real estate, the personal property tax, the motor vehicle, the water, sewer, that's where all the money is. And so that will be a major high risk class, regardless of what you do, how you spend your money, payroll, vendor, etc. Debt service, extremely important. And then we develop our audit program for each class in this phase. The next slide, please. Okay. From this phase to the end of the audit, we use checklists to control the flow of information from the client to us. All right. So what we're doing at this point in time is saying, all right, we need all this evidence from you to support our opinion at the end for the work papers. What the checklists do at this point in time is not asking you to define your flow of information, your processes, who does what, how do you actually write a check, and how do you pay a vendor. We understand that. We will go through this in the phase 3, the test of transactions, where we test transactions related to what we understand that as we went, how you operate. So one of the things we cannot do is just trust you, okay? We have confidence in your ability for the most part, but an auditor just can't trust you. What we have to do is have that natural skepticism as part of it, and we need to verify the accuracy of the numbers and disclosures in the financial statements. So we test things, you know, we don't pull every transaction. We do a sample through programs, etc. We make a selection, and then what you should be getting from us, you can go to the next slide, Beth, please. You know, we'll play out these, you know, these checklists as you go through. A request for interim ledger reports in summary and detail from the accountant. A request to accounting, human resources, and treasury for support for payroll transaction selection. So we'd pick, you know, 40 or 60 transactions, say for payroll, and we would determine based on our understanding as we went through all of the key controls surrounding this. And so how we're testing that, we're going to have to ask accounting, human resources, treasury for support for payroll selected. And that could be going back to union contracts, it could back to employee files to make sure that W-9s are there and everything else. So that checklist is basically saying, all right, we selected these 40 people, these 40 transactions. And what we need you to do is provide us with that information so we can audit the supporting documentation. Same thing happens for accounting and treasury for support of vendor transactions. We're going to make a lot of selections on the vendor side, and we need to, in effect, audit those particular transactions. And depending on what we find, whether the things were properly approved, were they approved on time, et cetera. We had one the other day that we were talking about. It was kind of a purchase order piece as we were going through the testing of vendor transactions, that we found several of them where the purchase order was later than the actual, invoice date. You got the invoice and then you did the purchase order. Some of them we understood why, other ones they need to change their system in order to make sure that that's corrected, because if they have a policy and procedure in place that you use purchase order in a specific manner, we need to be able to rely on that to produce accurate results. And management, say the town administrator, needs to know that the people that are transacting this are doing things in accordance with what everybody thinks they are, and they rely on the auditors to tell them that. Next slide, please. And so we'll go through. So request to accounting, treasury, collecting, assessor for revenue receivable, and abatement transactions to select for testing. And one of the things you're noticing here is that the requests that you get are more than one department, because each one of these particular departments touch that particular transaction that we may have selected for testing. So it's not a simple checklist that's like, okay, here's what we need, and this is what you need to supply to us. Now, it's not asking about your system, it's seeing whether or not how you defined your system is operating as intended. Another key place for checklist and the use for this is the federal single audit, and we'll send specific checklists to the appropriate department for both documentation of their internal controls and specific transactions selected for testing. So uniform guidance for the single audit put out by the feds have specific compliance requirements that everybody that gets money and spends over $750,000 a year has to have a single audit. Well, this really gets to department specifics, meaning that if we're doing a special education audit or a school lunch audit because they're a major program, we don't go to the treasurer or the accountant for that. We're over with the school business manager and, in effect, the people at the school department that run that particular program. And they're getting those particular checklists as we go through. The feds have specific compliance requirements, and they're looking for all that information. And again, just like we do for the financial statement audit, we have to document our understanding of that particular program and how that's running, and whether or not they're in compliance with the federal rules. Okay, and so there's another series of checklists for this. The single audit is in effect an audit within an audit. So we audit the financial statements, but the federal single audit requires us to audit that as it's like standing alone. And so a lot of things that we did up front for you, we have to do that to each one of the departments. Now, one of the things that happen, sort of like what we talked about before, what most communities do is they're going to have pretty much the same programs year to year. And so like before, they fill out that checklist up front and they have a major program, and the next year they have a major program. They don't have to fill that out again with the checklist. We'll send them a checklist of what we need to test, et cetera, but not a checklist of how they operate, because we'll update that from the previous year. It is not as difficult. However, in 2021 and 2022, and I expect 2023, and probably rolling into 2024, with the CARES Act funding that everybody got, and a lot of the ESSA grants and everything else from the school department, along with the new ARPA funds, the rescue plan funds that are happening as we speak. All of those are new, okay? And we're not sure right now the checklist that we're going to be sending out for this and who they're going to. And that may be to the treasurer, definitely to the accountants, definitely to the town administrator or the mayor, who's ever making this particular determination of how to spend the money. But this is new. These all will be considered major programs. And if you spend in total over $750,000, you will be, the auditors will have to visit you and do a single audit that may not have been done before. So this one becomes a little bit problematic, and some of the checklists that we may be using next year may not be as a formal checklist as we use in a lot of areas, and maybe one that we design ourselves and edit it to each one. And it may be a lot of narrative to find out who's running it, how it's done, but expect that to occur in the upcoming years. Next slide, please, Beth. All right. We're almost done at this point of the audit, the phase 4 year-end audit work. Okay. Main audit steps being performed are substantive procedures and year-end balance of assets, liabilities, and analytical procedures and revenue and expenses. So what we should be at this point in time is kind of like I said in the previous, right? We understand who you are. We have initially during the planning phase and during the second phase where we did the risk assessment, we had developed, in effect, audit programs, what we're going to do, the risk assessments, what we're going to look at, and the extent of the audit procedures we need to do on each substantive audit site, transaction class. Now, since we know all of this, it gets into, all right, what do we do? How do we audit? In effect, what we're doing at this point in time, we're auditing the balance sheet, for lack of a better term. All right. Checklists, again, are used in this process to manage the flow of information that we need to provide support for our audits. So those first phases, we're getting to this point. Now we're ready to assist you to prepare your financial statements. And so at a point in time, at June 30th, we have to audit the balances in there. You can go to the next slide, please, Beth. Okay. And so at June 30th, we're going to ask for various things from accounting, treasury, collecting, et cetera, as we go through. And I focused and then combinations of different things. So in order to start the audit at this point in time, we're going to ask for a year-end balance ledgers reports. So we need to get a detailed trial balance, a budget to actual, a general ledger with all transactions that were recorded at the end of the year. And the accountant is what's being audited. And so we're going to have in our checklist for the auditor, well, not the auditor, the accountant, some of them are auditors, but for the town accountant, we're going to ask for these type of information. And all of them are related to making sure the financial statements and numbers and notes to the financial statements are fully supported as we go through this. We will ask them for those reports. We will also then ask them as part of that checklist, and we follow this checklist to make sure that the roles and responsibilities between the firm and the town are defined, knowing that we ask for it at this point in time, we expect it by this particular date as part of the planning process, and you need to get it to us. So some of these things as we go through are asked for before we even come out to the field work, so we can get things started as you go through. But the accountant's responsible for a budget reconciliation between the tax recap and all the subsequent votes and the ledgers on the budget to actual, and we need supporting documentation. So each one of these on that particular checklist are used to make sure that we got what we needed for our work papers to do a comprehensive audit. We will ask for, what do you have for carryover articles and encumbrances? If you didn't spend all your money by June 30th, obviously a lot of departments request that you carry over some specific funds in their appropriation so they can spend till next year. That's a normal thing that we have to get, and we're going to get that normally from the accountant. Here's an important one. This is one that's done once a year. And remember, we talked about making sure, and when we document how you do your capital asset additions, deletions, depreciation, related support, this is something you don't do every day. The accountant does do every day. So you're not as good at doing capital assets because you usually only do that once a year. So if you process warrants every week, you usually come pretty good at it. Balancing, posting, everything else associated with that. Capital assets and how that's accumulated and what's being done based on what we had found before is a high risk area, because there's a higher probability in here that through error, there could be a significant error by not capitalizing a particular expenditure for the year. So that checklist that we used before to identify how they do capital assets, how do they identify capital assets, what are the adjustments, who's responsible for that, is extremely important when we get to this checklist, which is saying, give me the summary of everything you've done during the year based on what you described as your system of internal controls and procedures related to capital assets. We need deferred inflows and outflows as part of this support. We need other asset support. So there's other minor things. Each one of these other asset support is usually a low risk area. At year end, we need warrants payable and accrued payroll support. Now, the timing of warrants and how it's produced, and we also ask as part of that for cutoff procedures, meaning that a lot of times the warrants that the treasurer process and pays for the last warrant of, say, fiscal year 21 occurred on July 5th and July 12th. The accountant ledger may have reduced cash for that, while the treasurer didn't reduce the cash until July when it actually occurred. So we need that particular reconciliation. And so that would be part of a checklist item and a reminder to the accountant to provide that particular reconciliation as we go through. Other liability support. Next slide, please, Beth. Okay, other things for the accountant. Now, thankfully for you, the treasurers out there, the accountant gets more than the treasurer as they go through, but there's the other post-employment benefits and pension actuary reports that normally comes through the accountant. All right, we need the audited reports on those particular actuaries, and it's called an 805 audited reports, along with census data that we have to audit and test. So there'll be specific things in there that will explain this is what we need and this is how we need it. It's just more than just, don't give me just this. Our checklists are usually a little bit more specific, that has several items as to what's needed at what particular point in time. The accountant, or could be the town administrator, town manager, the mayor's chief of staff, we need to get legal letters from town attorneys. And so they usually shepherd that through to make sure that we get that timely. We need a schedule of transfers in and out between funds. All of these are related to the audit of the financial statements, and they're part of the checklist that we use in order to make sure that we audit each one of these significant transaction classes as we go through. For full accrual statements, compensated absences that are owed to employees, whether they're comp time, whether they're sick leave, or whether they're just strict vacation, that liability has to be recorded. Schedule and support for workers' comp liability. If someone's out on workers' comp, the accountant needs to provide us with their accrual of what's going to be paid in the future for what was a liability at June 30th. Same thing for landfill liability. If you have a landfill, there's closure and post-closure care costs that has to be accounted for, not in the the budgetary financial statements, but in the full accrual statements. And then especially as we go through support for various note disclosures. Treasurer also gets this as part of it because there's extensive note disclosures related to cash and investments. And normally we get that information as part of that, but we'll also ask the treasurer to review the disclosures to make sure that they're in agreement with this when we finish the notes for you as part of this. And then the accountant does a completion of the scheduled awards single audit. So he's responsible, she's responsible for giving us that particular information. Next slide, please, Bill. All right, now one of the important parts, main items requested from the Treasury. Year-end reconciliation of cash and investments between the bank and the cash book, and a copy of the electronic cash book if you need that. This guide's probably one of the most important things that we do in the entire audit, okay? And it's really the most important thing that we look at to make sure that the cash and investments are reconciled, and that we're gonna request that from you, and we're gonna audit the heck out of it, okay? Some of your accounts, a lot of your accounts at the Treasury are simple. You know, you could have a MMDT account that has a couple of transfers during a month, then investment income for the end of the month. Easy to audit that. But when we get into the vendor account or the payroll account or the depository account, there's a lot of activity that goes through that, and we're going to make sure that you have a good handle on that. We want to make sure that the cutoff, the schedule of bank transfers between June 15th and 7/15 occurred. So if you wrote a check from one bank to another bank, you know, it has to, you know, go out of one and clear through the other, and it has to clear in the same period of time, and that you've got a handle on those particular transfers. So when you're funding the vendor account, that it happens in the same time period, so the actual cash that's reported is accurate. We will ask for ourselves a copy of each individual bank and investment statements for June 30th and July 31st. And that's part of that checklist that we want to go through. This is something that we're not asking you to do anything. This is what you do as part of your normal course of business, that you reconcile all these things on a timely basis as you go through this, and make sure that you tie in. Copy of each bank account reconciliation for June 30th, along with the detail of the outstanding checks, deposits and transfers and other reconciling items. This is something that should be already available once you finish that particular month. And then what we will do is we'll have, as part of that checklist, we want explanations for any June 30th reconciling items that remain uncleared at July 31st. Realistically, pretty much all outstanding checks should be cleared by the end of the month. If not, why? We want to know why. And then right underneath that, we get a detailed schedule of tailings, but we want to know that. And then we want a detailed reconciliation of if you have any tax title receivable. And then in addition to that, which I said is usually pretty easy, is the detailed debt schedules. Next slide, please, Beth. Collecting the same type of information from them, year-end reconciliation of receivable balance between the summary ledgers to the detailed reports. Same type of cutoff as we go through. Analysis of old outstanding receivables, not transferred to tax title. Any significant, I didn't write that down, any significant credit balances as you go through. Reconcile of all deputy collector reports, and reconciliation of the collector's bank account. Some collectors still maintain their, and proof of when the funds on June 30th have been transferred to the treasurer in July. Next one, please, Beth. But then we have to ask things from accounting and collecting. This is one of the big fights that normally occur. Who's responsible for reconciling between departments? From an audit standpoint, both of you are, okay? When I take a look at it, it's not, if you want to point fingers at each other, that's fine, but I look at it as each one of your collective responsibilities that should have been part of your policies and procedures. So we're looking at the reconciliation in effect between the collector's balances and the accounting ledgers at June 30th. Next slide, please, Beth. Same thing for accounting and treasury. Year-end reconciliation from the cash book, the accountant general ledgers. Tailings, the same thing. And if you had tax title receivables between accounting and treasury, and the reconciliation of outstanding debt between the two. So those type of things you should be used to with an audit as part of what we ask you for as you go through. But checklists are important as part of the audit in order to have, if you go to that last page before questions, Bill. All right, I look at these benefits using checklists. We control the information flow between client and the auditor. We know when we're supposed to do things and when you are. establishing deadlines for both parties to meet. And one of the more important things, identifying significant lapses in internal controls that, if not corrected, could lead to error in the financial statements or fraud. And everybody knows fraud does happen. And the other piece too is we want to make sure that the auditor properly plans and conducts a comprehensive audit. So that kind of gets us through the whys we use that, and hopefully explain the need for these as we go through for us to be able to do our job. And that kind of, I think I'm only going to like 12, right, Beth? And is it close to 12? Oh, I got 3 minutes. So does anybody have any questions? If none, I'd like to bring up a quick little other issue on ARPA, if that's okay. If nobody has any questions on that. One of the things that ARPA is new, the American Rescue Plan Act, et cetera, and everybody's been allocated a lot of money to spend. And one of the things, or one of the expenditure categories, is called revenue loss. Everybody is confused about revenue loss. That's an expenditure category. And so what I've seen a lot of communities do is say, oh, I had a revenue loss. Basically, because of the pandemic, just think of all of the, say, revolving funds that didn't occur. We had a lot of places that lost a lot of money they didn't collect because of hotel motel taxes not being collected because nobody stayed at a hotel or motel. We had a lot of people lose a lot of money because of meals tax as they went through. But what people think that means is that since I lost revenue, I get all that money and I don't have to expend it. What the federal government was doing and explaining and coming up with a category called, revenue reduction, revenue loss. What they're saying is because of the pandemic, you were not able to spend money because you didn't get it in. So you had to postpone spending things that you wanted to spend. Maybe you wanted to buy a new a backhoe, a DPW, but you weren't able to buy that because you lost so much in revenue for hotel motel cash. What they determined from a revenue loss, it's not you get the money because you lost revenue, is that now you're allowed to use that expenditure category to spend money. All right, and that's the difference. So you still have to identify what you're spending the money on. You just don't get the money back saying, okay, we lost $2 million worth of revenue. I want $2 million back. So whatever that allocation was, just kind of understand that it's a little bit different than than what's out there right now. And if you're part of one of the counties, whether it's Norfolk or Bristol, Barnstable, or Plymouth, the county got the money and they have specific rules on revenue loss that you may want to contact them to understand from the county administrators what you're allowed to spend on revenue loss as you go through. Just wanted to make that point. And if anybody had any question on that, I'll take that now. If not, I think it's 12. I can't hear you, Beth.
Great job, Jim. Thank you so much. You went over so much information, and now I'm ready to be a treasurer collector because I know all this stuff. So if anyone has questions, please ask. And we have some time. I'm going to put everything on stop for a while. I will keep everything going, like for the video, so you can just put off your video, and we don't want to hear what you're eating, so you can turn off your mute as well. And I'm going to turn off our recording. And thank you again, and we will see you hopefully in August.
Okay. All right.
Bye.
Thanks, Paul. All right. Take care.